Hey, welcome everyone. It is 6 a.m. Pacific time on January 24th, so half an hour before the market's going to open. We had a lot of earnings report last night, this morning. Some of them pretty big, important names, probably the biggest of which was Netflix. Netflix reported, well, at least the market reacted very well to Netflix's earnings, so that should bring the markets up this morning. I think the implied move was about 8 to 8.5%, and I believe that so far Netflix has moved about 10%, so larger than expected. So that really should be a boon to the markets. Let's see how futures are going. And you can see that across the board in all the major indices, we are up all significantly. So if we look at the NASDAQ, that's up 80 basis points, which is quite a bit. And so that's probably directly related to Netflix. And that would, of course, help drag up the S&P 500. And the Dow may or may not move in sympathy, but we also had things like, I can't remember the exact names at the moment, but there are several industrials and a couple basic materials. So that would figure into the Dow. The Dow is up about half a percentage point. So beyond random and no, I'm sorry, I was looking at the S&P. Yeah, the S&P is up half a percentage point. The Dow is about 0.4%. So all beyond random, definitely a bullish bias in the markets this morning. And that's all going to be earnings driven. That's not going to be anything to do with bonds or anything to do with interest rates or anything else or any of the economic news. The economic news today is very light. If I remember correctly, basically just oil. Now, PMI composite flash and then oil. So there may be, let's take a look at how the energies are reacting. And, oh, positive. Okay, so probably some pretty good news out of that energy report or that oil report. So SPY, let's take a look. We are with that boost up in the indices or in the futures. We've got to be careful of that 490 level that we've been talking about. The first important psychological resistance that brings us a lot closer. Looks like pre-market, we're going to be at 487.46 and our ATR is at 4. So if I add 4 to 487.5, that brings me to 491.5. So there is potential for us to hit that psychological resistance today. So I'm going to draw that because it's going to be pretty important to watch today if we get near those levels. So we'll put a line at 490. We'll make that a different color so we pay more attention to it. And then we'll draw our lines from yesterday's important levels. And I could draw lower ones, but I don't think we're going to go significantly low. Chances are we're going to have an update today. We're not going to go below yesterday's close. It's very unlikely. So I'm not going to draw those lines down there. I might end up eating those words, but that's okay. Let's just draw our psychological points right here. And 489 intraday may see a little bit of resistance. And so we'll go with those as our levels. So we really want to see, especially at the open. So normally we expect the market to move towards the previous close. So in this case, it would move downwards initially. With all the momentum that we have from earnings and the exuberance we have at earnings, I wouldn't actually be surprised if we moved upwards instead. So today I would call it about 50. Instead of having that downward bias that we normally have, I would call it 50-50. And if we initially only trade in this narrow range or on the downside and then bounce up, that wouldn't be too surprising either. Or, if there's just extreme exuberance, then we can just start moving upwards. I don't think we'll go straight to 490. We can probably react to one of these levels and pull back before getting to 490. But definitely bullish bias today. And definitely we want to pay attention to how well we react to that 490. If it goes straight through, then we're talking probably about 500 at some point in the near future. And just take a quick look at the Fed Watch tool, see how we're doing over here. We bumped up, okay, so it looks like we went up 5 or 6%, so that's definitely giving a boon to the markets as well. If we look at TLT, looks like we're opening down, up. We're opening, probably going to open up near that MA50. So we're going to challenge that MA50 again. So we want to pay attention. If we can cross back above that MA50 and back up to that 200 or at least the EMA 20, then we will probably get to that 500 or 510 level in the S&P 500. So today we're probably going to see volatility because of all the earnings. Normally we'd be waiting for that GDP report that's coming out tomorrow. But with all the earnings, like I said, earnings is going to take precedence over all of these fundamentals like GDP and interest rates and all of this, because the market is forward looking, and GDP and interest rates help us describe the environment of our future outlook. But the earnings reports are the actual condition of all the companies of the market. So it's sort of like saying, do I look at when I'm driving my car, are the road conditions more important, or is the state of my engine, the state of my car more important? Well, they're both important, but if my car is in perfect condition and have a full tank of gas and is perfectly maintained, if I go into normal environments, even if it's a tough environment, then it's not going to be an issue. It's only going to be an issue if that environment becomes really extreme. There's flash floods, or I have to go off-roading for some reason, then it might become an issue. As long as these are within kind of normal or just not too far outside of normal, then we're not going to react too much to it. It's going to be a lot more important for us to look at the earnings that are coming out. So we're not really expecting anything really extreme out of these reports. So our expectation is that earnings are going to continue to take the lead for at least until we get at least midway through 60, 70% of earnings of companies have reported. Then we kind of have a very good idea of how the rest of them are going to go. So at that point, we may start to shift back into fundamentals inside of the market. All right. So for the rest of the day, I think that's it. There's not much else for us to look at. Watch VIX as well. That'll give us an idea, but really it's probably going to keep coming down if we see the upward movement in the markets. What'll be really interesting to see is if we hit 490 in the S&P 500 today, what happens to VIX? If we start to get upticks in volatility, then 490 is going to be an important resistance level. It's going to have difficulty getting above that. And if we get really big spikes in VIX and we hold out 490, that's going to be a clue that maybe we're going to start pulling back. The other thing that we want to watch is intraday, the TLT. Okay. So was this the TLT? No. These are both SPY. Okay, TLT. So if we look at yesterday, you can see that for the most part, bonds went down, S&P went down. Bonds went flat, S&P went flat. Bonds went up, S&P went up. So the S&P on an intraday basis is very closely tracking the bond market. Not on a multi-day level. So if I look at the one-day level, S&P has just been going straight up, and then TLT has been coming down. But on an intraday level, it's been tracking very closely. So we can look to the bond market for clues as to how the S&P 500 is going to react intraday as well. So just if you want to get a little bit of a future look, bonds will always lead equities. So if this didn't happen yesterday, if we didn't see what pretty much perfect correlation in these two markets, I would say ignore it. We're in the middle of earnings season, and that should be the dominant force in the equities, even intraday. But since we saw such perfect correlation yesterday intraday, then we actually kind of see that there's something a little bit deeper at play. So we'll just want to watch that intraday as well. So those are things to look out for. Have a wonderful day, and I will see you guys in the aftermarket.